Ready to pass the CPA exam faster? Visit cpapass.ai. Today, balance sheet transactions and entries. Master the practice sheet. To master the CPA exam, you must treat the balance sheet as a financial snapshot, not a movie. Think of it like checking your bank account balance right now using the bank statement analogy. It tells you exactly what you have at this very instant, not how much you spent over the month. This statement of financial position presents a company's assets, liabilities, and equity at a specific point in time, such as December 31st. Examiners love to trap students by mixing up these snapshot balances with temporary income statement flows. Always verify the date before analyzing the accounts. Assets represent the economic resources owned or controlled by an entity, such as cash, inventory, and buildings. Under the going concern assumption, we value these assets assuming the business will continue operating indefinitely, rather than liquidating them at fire sale prices. When recording transactions, remember that every asset purchase must keep our fundamental equation in balance. For example, if Sam's Bakery purchases a new oven for $10,000 in cash, one asset increases while another decreases. The total assets remain unchanged, demonstrating how double entry accounting keeps the balance sheet perfectly aligned. Liabilities are the economic obligations a company owes to external parties, including bank loans, accounts payable, and accrued taxes. On the CPA exam, pay close attention to how we disclose uncertain liabilities. Under JAP, we follow asymmetrical contingency disclosure rules. This means we must record a loss contingency on the balance sheet if it is both probable and reasonably estimable. However, gain contingencies are almost never recorded on the balance sheet due to conservatism. This asymmetry prevents companies from overstating assets or understating liabilities, which is a major focus area for examiners. Stockholders' equity represents the owner's residual interest in the assets of the company after deducting all liabilities. To easily memorize this relationship, use the ALE mnemonic: assets equal liabilities plus equity, just like a glass of ale. Equity consists of contributed capital from stock issuances and retained earnings accumulated over time. Retained earnings serve as the vital bridge between statements. Net income from the income statement increases equity, while dividends paid to owners decrease it. Understanding this connection is essential for solving complex balance sheet reconstruction problems on the exam. Let's walk through a practice example to verify how transactions keep our equation in balance. Suppose a business starts with $50,000 in assets and $20,000 in liabilities, leaving $30,000 in equity. If the company then earns $15,000 in net income and pays $5,000 in dividends, its ending equity increases to $40,000. If liabilities remain unchanged, total assets must rise to $60,000 to maintain balance. Every single transaction affects at least two accounts, ensuring that assets always equal liabilities plus equity. To succeed on CPApass.ai practice exams, you must avoid common classification traps. First, never confuse cash with revenue. Under accrual accounting, receiving cash in advance for services creates unearned revenue, which is a liability on the balance sheet, not revenue on the income statement. Second, remember that notes to the financial statements are not optional. They are a required part of a complete general purpose presentation. Finally, never mix up GAAP rules with tax rules. Keep these systems separate, maintain the double entry equation, and you will master every balance sheet question on exam day.